Hey, you guys, I'm Phil Town from Rule 1 Investing, and today I want to talk to you about how increased interest rates that are going up fast are impacting the housing market, real estate. All right, so we all know interest rates have risen really sharply in the last months, right? The Federal Reserve is increasing their reserve rate, jacking it up by 75 basis points every quarter, and they're going to continue, they say, to keep raising rates to stamp out high inflation. Now, here's the thing: I got to tell you, if you're wondering how to pick stocks at a time like this, you really might help you to get the guide at the link on the description below, and then just keep watching, because we're going to talk about some heady stuff here. Rising rates can have a huge impact on the economy and on the real estate market and on the stock market and on everything related to real estate. With higher interest rates, the cost of borrowing for a home increases dramatically. And as interest rates go up, so does the amount of money you have to pay every month. And that limits what people pay for a house, and that slows down the growth of housing prices. In the past few years, housing prices have gone nuts, right? Interest rates have been extremely low, red hot real estate market. You get the government in there messing with interest rates, and my God, what happens is housing becomes unaffordable. It's amazing to me how the unintended consequences of government intervention in markets can swamp all the good intentions, right? The good intentions of keeping interest rates lower so people can afford a house. But what happens is people raise the price of their houses to the maximum people can pay. Duh. It's a market. You would do exactly the same thing. And so instead of being able to buy a house for $300,000, you're going to be buying one for $1 million, thanks to the federal government. And of course, that was, you could swallow that when interest rates are at 2%. But when interest rates go to 6%, good luck on that one, right? Blows my mind, you guys. I got to tell you, when my dad, I'm a pretty old guy, so my father would be, I think, in his 90-something now. So he came out of World War II, part of that whole generation, and got a job making $5,000 a year. And he went to a beautiful new community outside of Portland, Oregon. No crime, really good schools, and bought a home, like a 2-bedroom, 1-bath home with a garage in a great neighborhood for $5,000. So he could buy that house for 1 year's income. Now, let's fast forward to today in Portland, Oregon, in that same little town. That house is still there. Some of those houses are still there. Those houses now cost, that $5,000 house is now $350,000. And a person with my dad's job, when he started out, that person is starting out at $36,000 a year. So a house that used to cost 1 year now costs 10 years. And that has entirely been the result of federal government guaranteeing home loans, trying to make money available for people to get homes. As a result, they've just destroyed the ability of the American family to own a home. It's unbelievable. The same thing has happened with colleges. So I'm really gonna kind of bang on hard on this a little bit for what's ahead in the real estate market. High interest rates, if they keep jacking them up, real estate market in good markets is going flat, and bad markets is going down like a brick. And that's going to mean we're going to have another wave of bankruptcies, which is really too bad, another wave of people getting foreclosed on. So all these good intentions can result in this huge mess. All right. So I don't really look toward a really positive view of where real estate's going. I think it's already slowing down dramatically in the weaker markets, and we'll see what happens. We'll just see what happens. Now, if you're looking to invest in a home, should you do it right now? Yeah. Because I'm telling you right now, interest rates are not where they're going to be in a year or two. The Federal Reserve in 1979 raised interest rates high enough that they were above the rate of inflation, okay? The rate of inflation in 1979, the stated rate was 14.9%. So Volcker, the head of the Fed, raised interest rates to 20%. 20%, all right? Mortgage rates hit about 15% per year, because inflation was at 14.9. Today, the stated inflation rate is about 8 to 9%. But if you calculate inflation the way they calculated it in 1979, our inflation rate's at 15%. Therefore, the Federal Reserve, to stop inflation, should be raising interest rates to 15 to 20%. They're raising them to 5.5%, 6%, maybe. So it could be that they're so far behind the inflation rate curve that they're just praying that a great deal of this inflation has just been driven by supply chain problems from COVID that'll work themselves out. That may not be true. They printed so dang much money in 2020, 21, 22, these last 3 years, that the money supply is massive, and that's inflationary like crazy. So I don't have an answer for sure what's going to happen, but I would say if you can get a home right now with a 5 or 6% interest rate, go get it, because that's going to look pretty good in a year or two, I think. Now, in terms of where the stock market's going with real estate, as real estate interest rates go up, real estate mortgages interest rates go up, real estate investment trusts, REITs, are going to get cheaper and cheaper and cheaper. Back in 1980, after years of inflation, real estate investment trusts were super cheap. You could buy real estate at a discount from its net asset value. In other words, if you went out and bought the houses that this real estate REIT owns, you'd pay more for the houses in the market than just by buying the REIT. And those REITs eventually made fortunes over the next 20, 30 years. So right now we're at the peak of the REIT market, and we may want to be really, really skeptical about where that market's going to go if interest rates really take off. Now, I'd love to hear from you guys. You know, what do you think increased borrowing rates are going to do both to the real estate market and to the stock market? And leave a comment below with your answer. I'll be sure to follow up with you, and thanks for watching. Now go play. All right, you guys, if you enjoyed the video, and you think it might help you a little bit more in figuring out what to do with real estate right now, both in the housing market and in the investing markets, hit the like button. Please share the video with your friends. Hey, if you want more investing content, subscribe to my channel. And by the way, there's a free gift out there. Just click on the screen and we'll get it out to you. And thanks again for watching. See ya.